You're watching the stock market print candles live, and in this video I'm going to be sharing with you my live trading session, how I am trading the market using pure price action. As you can see, I'm relying on the pure candles as they're printing on the chart, and during the overnight session we had a very clear pattern, the spike and a channel bearish pattern, and in every single chart there's always a channel, a pattern being present. There's a reason to price movement. And my goal as a price action trader is not only to identify the proper context, which in this case we have a nice and clear bearish bias, it is to identify the places where to enter, which I'm going to be relying on high probability setups, which they form at the key entry point. For this reason, I'm trying to identify the proper key entry point, the trend line, and the exponential moving average, the 21 bar EMA is one of the key entry points as well, just a supportive indicator. High probability setup is going to be a variation of a two-legged pullback. As you can see, every single correction consists of a two legs, and it's really visible, especially here when we have one bullish leg, correction, second bullish leg, and notice the second entry short at the key entry point. Similar happened right here, one bullish leg, correction, second bullish leg, and we have second entry short at the key entry point, and lower high confirmation setup, price is trending to the downside. We had one leg break, second leg, and a micro first entry short, second entry short. Now, the reason why I'm following the channels, because there's a trend line rule which says after break of a channel, you're not just expecting reversal. No, the sellers still want to retest the new extreme, and now we close outside the channel and created the new low. So this is important. So this is basically what I'm going to be looking for, capitalizing on the setups right here at the key entry point where the correction phase will end and a brand new push phase will begin. And right now we have a break in new extreme, so the market can go into a different cycle, which is a correction or possible reversal. The stock market has opened, and we can see the bullish channel created a break and a new extreme in the form of a two-legged pullback. First leg, pullback, second leg. As you can see, we had a downtrend that flattened a little bit, entered a correction phase, and you can see this is not a strong reversal right now. This is rather a sideways correction, and we have a trading range. Most breakouts of trading ranges will fail. We had a two-legged pullback, new high for the uptrend. I was looking for technical failed second entry long or lower high below EMA, but as you can see, we never formed it. Market continue working lower. Let's see what can happen. But we have two-legged pullback. I'm eyeing always those two legs. Most breakouts will fail and prices are trending to the downside. We were expecting for prices to form failed second entry long, but I wanted to see EMA reject prices. Instead, we pushed above. So this is a little bit concerning. Also, EMA got very flat. We entered a congestion. Now we had a breakout pullback, but everything is too flat. All right, traders, I'm resuming the video as I'm going to take a failed second entry long. The signal bar is very big, so I need to use limit order. New high, first entry long, pullback, second entry long, failure. Come on, pull back a little bit here. And we missed the setup. So as you can see, we at first expected the failed second entry long to form, but I wanted to see EMA reject prices. That didn't happen. We had push above EMA and congestion. So prices are stalling a little bit and they're a little bit more bullish. This is not what I want to see. I want to see prices to stay below EMA. Now we had the two-legged pullback, new high, and we expected most breakouts to fail according to range rules, and we traded down into this trend range. So notice I'm just relying on pure price action. I expected a second leg for this leg, a new low to be formed. But as you can see, there was a breakout pullback lower high, but it was a bullish bar. This is a congestion. We broke lower. Most breakouts will fail even out of these congestions. Pullback, tested it. Horrible signal bar. And then you have new high, first entry long, pullback, second entry long. And notice EMA keeps rejecting prices every single time. So basically, you have a break in new high, so you're stop thinking bullish. Most breakouts will fail, so expect for prices to go lower. You trade it down, and this downtrend needs to get new extreme. So all you're thinking about is just a good way for you to enter, and this was the perfect tier 1 signal bar, but the stop was over 6 points. So yes, I knew I may miss it, but in case I'm wrong, I have 6.5 point stop loss. It will wipe out a couple of my winning trades in the past. So I really wanted to be patient, even though I was risking missing it. As you can see, it was a great setup, and now we're heading all the way down. Prices traded all the way down to test the loaded trading range again. All the buyers started buying at the loaded range. Sellers are taking profits, and a massive bullish momentum occurred, which means I need to redefine my bullish channel. As you can see, we are pushing to the upside, so I need to respect this strong bullish trend as of right now. I cannot fade, sell, as long as this push is strong. Notice we had a clear break sideways and clear 2 legs up. This is still part of one move. This can help you to stay away from selling too early. That is one of the clues that you can recognize that the failed breakout may be successful. If it looks like a 2 broad legs up, you can sell. If it looks like a part of one move, one clean, steep, seamless leg, you definitely don't want to be selling just yet. Right, cheers. I'm resuming the video as I'm going to take high-low confirmation setup. And we got filled. So I'm going to move my target profit a little bit higher. I'm going to move my stop loss to break even. And what I was looking at, we had a new high, first entry long, pullback, second entry long, far away from exponential moving average. I didn't want to take it. Then I was possibly thinking we may go back into a train range, but notice what happened. We didn't manage to break EMA once, twice, 3 times, and 4 times we had a nice big bullish bar. So basically I'm treating this as a double trap. Everybody who went long too early here far from EMA got trapped, and everybody who went short too prematurely got trapped as well. So we can see EMA holding prices. This is a breakout pullback because we have a failed breakout. Prices came back, tested the key level, and the resistance acted as a support. And once this big bullish bar formed with 4 quadruple bullish rejection, this is a sign that we have potential double trap.
Stop filled.
And we can see we managed to get a quick scalp. Why I wasn't so keen to sell here, even though you can make scalps on the way down? Well, because it looks like a one steep leg and we haven't touched EMA once prior to creating a breaking new high. This is too steep. So I capitalized on just one little push higher. Also, I couldn't really find a better wider downtrend. And since you never pushed below EMA and EMA held 4 times, I figured it's a good place for me to take a quick snap back, one more push higher, given how strong this uptrend was. So I'm just comparing how steep this looks, and this looks too sideways, like a clean 2 legs up. If I'm going to reanalyze the main price action, we can see we created major high-low, bullish spike, but prices are too rangy for me to go long, and at the same time prices are too bullish for me to sell. So this is one of those areas on a chart where I would be simply guessing, which is not something I want to do. I want to have everything aligned perfectly, the context. I want to be sure my key entry point is confirmed, and I want to take a high probability setup. Right here, it is tempting to sell because we were in a trend range, but I cannot deny the fact that the prices are overwhelmingly too bullish, given the fact that we didn't manage to go back to the support in very strong bullish spike. So I don't know how many more pushes higher there's going to be. So pretty much I'm just going to be waiting patiently for price action to give me a clear picture. Right, shaders, I'm resuming the video as I'm going to take a second entry short. I'm going to chase it a little bit. New low, first entry short, pullback, second entry short, and we missed the setup. It happened really quickly. So you can see the similarity. We had a very nice, strong tier 1 signal bar, just like we had here. We could have already had a 3-0 for the day. But what I liked is that we have 3 swings that confirm the channel. We have a failed breakout out of the trailing range. This is a 4th confirmation of the channel. So we have a downtrend working lower, and the trend line is holding alongside with the exponential moving average. So we have 2 key entry points holding. We have a first entry short, second entry short, strong tier 1 signal bar, and also you can see you have micro triple test. 1 top, double top, triple top. So you have 3 key entry points basically allowing you to enter. It worked for a quick, easy scalp. It's a shame that I didn't manage to get it on time because I was also trying to record it. Hopefully some of you took it because it is a great second entry short of 2 key entry points. Just like I mentioned earlier, this is what I'm trying to do. Identify clean 2-legged pullback at the key entry point. And this was one of those clean 2-legged pullbacks at the key entry points. The uptrend created a break in new extreme. The downtrend still needs to get new low according to trendline rules. This is way too big of a bar, so I'm expecting to get some decent lower high or failed second entry long to confirm we're going to get new extreme and to confirm we're going to stay below EMA, as the sellers are going to be attempting to create the new low for this downtrend. Resuming the video, as there really wasn't any good opportunity for me to take a setup, we created a break, massive flag to new extreme. Then you had a second entry short, but notice the uptrend needs to form new extreme. You have a big bullish spike right into EMA, and after you form breaking new extreme, you have to pause looking to shorts. You will need to get some confirmation setup and this uptrend creating new high. After that, we entered a consolidation and suddenly we spiked to the upside. So far, easy day. You already would have been 3-0 if you managed to get filled on these very fast setups. Other than that, I'm just waiting here. Right, traders, I'm resuming the video as I'm going to take the long here. We have a new high, first entry long, little pullback, second entry long. Let's see if we can get the fill here. The bar is quite big. I still think we can pull back a little bit lower. And we missed the setup. All right, so this is our third miss. But as you can see, we have a new high, first entry long, pullback, second entry long. Since we have overshoot, I let the price action to break the channel. And you can see we have almost measured break on the other side. The clue here, why it is okay to go long, is basically the same thing as happened right here. Notice the downtrend formed break new extreme. So we had break a new low. And EMA held once, twice, 3 times, so already great sign the buyers are buying and you expect new high according to trendline rules. And notice how large this bullish bar is. It forms so big, completely engulfing all the earlier bars, meaning if you have a failure here, you cannot probably make a case for prices heading down. If this bar was much lower, you can still make a case for a little fake out working lower, but this was such a strong bullish bar, T1 signal bar, and you expect new high with the break and new low right at the key entry point. Great setup to go long. Alright, traders, I'm resuming the video as I'm going to enter high-low confirmation setup, and this time I'm going to chase it. We got filled, so I'm going to place my stop loss 1 tick below the signal bar. I'm going to go for 8 tick target profit. And the reason why I'm entering this setup is because we have a larger two-legged pullback down, which means that the downtrend played out with the break and new extreme. The sell is depleted. And even though it's a little bit hidden, I can see that we have kind of like a first leg, break, second leg. So this looks like a visual second entry short. So technically it is just a high low, but I'm treating it as a failed second entry short. A lot of sellers must have gotten squeezed here because we have overall uptrend in play. As you can see, we got filled, so I'm gonna tighten the stop loss to break even because anything can happen right now, even though I'm holding a runner expecting for prices to reach these highs. We have a weak uptrend. You can see I found this spike in a channel and I'm looking to buy low where the correction phase will end. And weak uptrend, you can see you got to be careful buying directly at these highs. But since I have a two-legged pullback here, this allows me to guide me to understand that we have a break in new low and 2 legs down. And you can see how prices are starting to stall here and a lot of sellers are going to get trapped. So technically this is just a high low, but we have visual failed second entry short and I'm buying low where the push phase may begin, similar to what happened right here. We have first leg down, break, second leg down. So let's see if we can get some runner here. All right, so we can see bullish momentum working to the upside, although I will tighten this 1 tick below this bar. So I'm just going to be happy with taking a couple points. If we rail up higher, then it's going to be just a bonus. I'm going to keep trailing it 1 tick below each bar, but I'm going to lock in at least some profits out of this move. As you can see, it was also triple test. 1 bottom, double bottom, triple test right here. So two-legged pullback played out, breaking new low. A little bit aggressive because it didn't fully close above EMA, and chances are really high after the depletion the seller is going to get trapped. If it didn't look like visual two-legged pullback, I wouldn't go long here. But the fact that you can see a lot of sellers must have gotten trapped here, I'm going to trail it really tight. And we can manage to squeeze a couple more points. This is why I'm holding the runner. In case market does something unexpected, I want to be part of it. And I don't want to miss this move. Alright traders, and our runner just got stopped. So I'm going to wrap it up with my 2 trades. The high low here. And the double trap right here. I marked even one more aggressive low high, which you could have considered at the beginning of the day. Then we had a nice failed second entry long that I didn't manage to get filled. Followed by a very nice second entry short. Quick easy scalp. Gorgeous second entry long. Decent failed second entry short. But the bar is quite big and you wouldn't have the chance to use a limit order here. And then the market entered a weak uptrend stage where you really have to be careful buying right after you exceed the latest highest high. You need to let the correction play out. Decent high low. And this is quite aggressive setup, basically a visual two-legged pullback, but you would have to use double bar entry. There was actually a bearish doji signal bar, and this is my last trade for the day. So I hope you find the video helpful, educational, and I'm going to talk to you next time. Take care, everybody.